And I'm going to
Nathan,
Facebook Live.
before you begin the recording,
Yes.
can you see if Nils is in the waiting room?
There's nobody in the waiting room currently.
There's nobody in the waiting room. What about for a phone call? No, only I can hear you through the phone.
Supreme Court.
Yeah, at least.
Yeah, that's the least we'll get. And maybe a continuing resolution.
So we're up and running on Facebook Live. It just popped up, so we're broadcasting.
Okay. Welcome to the September meeting of the Audit, Budget, and Finance Committee of the Buffalo Fiscal Stability Authority. Our meeting today is being live streamed on BFSA's Facebook page. Our agenda today includes a review of the audited financial statements for the year ended June 30th, 2020, which will be presented by the independent auditors from Lumsden and McCormick. A review of the 2020 annual report as prepared by staff. A review of the annual investment report. And a one-year contract extension with BFSA's financial advisor. We will consider recommending to the full board the approval of both the audited financial statement and the annual report. First, I'll take the roll call. I'm here. Director Floss is present. Yep. Vice Chair Jurasek is excused. So a quorum is presented. The first item of business is to approve the minutes of the meeting held on June 24th, 2020. The draft minutes and the accompanying draft resolution are located in the electronic committee package. Is there a motion to approve the minutes?
So moved.
Second. Any changes, additions, deletions? Okay, we'll vote. All in favor?
Aye.
Aye. Opposed? Okay. The next order of business is the receipt of the results of the independent audit of the BFSA for fiscal year ended June 30th, 2020, and to recommend the acceptance and approval of the financial statements to the full board. The draft financial statements have been provided to us in the electronic committee package. Donna Gonser, the partner on our audit from the firm of Lumsden and McCormick, is here to present the audit findings. Ms. Gosner, welcome and thank you for meeting with us today. Would you please present your findings?
Well, hello, everyone. Thank you for having us here today. And I have to say the audit looked very different this year for a number of reasons. The first is my presence back after 5 years because the public authority law does require partner rotation. We have, I actually was the partner in charge of this engagement for 5 years prior to Sarah Dayton taking over 5 years ago as the partner in charge. So Sarah is also on the call today as the rotating partner. So thank you very much. I'm pleased to be back and see so many familiar faces. But the audit also looked very different because of the pandemic and the shutdown. And we actually performed the audit entirely remotely this year. Sometimes said audits couldn't be performed remotely, and we've actually proved that wrong. Because of the pandemic, we were forced to look at how we perform things, how we perform our procedures, and we're pleased to say that we were able to perform the audit very efficiently. We're presenting today, September 23rd, which is very consistent with how or the time frame that we've presented in the past. We were able to do the audit efficiently because many thanks to your staff for their ability and their timeliness in getting us the information electronically. We also invested in some efficient audit software. It's called SureLink. It's new to us, but it actually does provide a lot of efficiencies, and it gives us the ability to organize data, to track data, and we think that worked out very well to give us a lot of audit efficiencies as well. So we do have a presentation. I believe you do have draft copies of all of our reports, but we do have, and we're sharing on the screen, a presentation which summarizes all of the pertinent information from those reports for, just for a concise presentation. So if you'd like to follow along, the results of our audit scope and results are Our auditor's report on the financial statements is an unmodified, or what we call a clean opinion, which means that the financial statements there are no modifications to the financial statements for them to be in accordance with generally accepted accounting principles. We also issue an auditor's report required by government auditing standards. It's informally called the Yellow Book, and there were no findings or matters in the testing that we are required to do in order to issue that report. We also issued the auditor's report on compliance with New York State Public Authorities law, and that's included as the last page in your draft financial statements. And again, no findings, nothing came to our attention that caused us to believe that the authority failed to comply with the Public Authorities Law investment guidelines during the year. We also issue a communication to those charged with governance, and that's a 2-page letter which basically summarizes our audit results, and we'll review that summary today. And also a management letter, which identified no material weaknesses. And we really will review that as well today. It's what we cited was an awareness matter regarding new standards, upcoming standards related to leases. So to briefly give you a high-level review of the financial information, starting with the statements of financial position, you can see that assets went down about $8 million from 2019. That's primarily due to repayments on the notes receivable to the city. Those are your mirror bonds. So about 4.8 was paid in principal and about $30,000 premium amortization. So that went down almost the receivable decreased about $5 million. You can see cash also decreased by about almost $1 million. Included in cash is cash equivalents and investments. In investments are about $5.2 million held for debt service. So because the debt is also declining, the amount that has to be held is also declining. So that went down by approximately $1 million. And then due from other governments net, that is the May and June sales tax receivable. So you can see that it also declined about $2 million. You'll find when we look at the revenue and the sales tax due to the pandemic, revenue also decreased in the final 4 months due to the shutdown. So the receivable also decreased about $2 million. So deferred outflows of resources, that's primarily related to ERS, and it's the difference between the projected and actual earnings, and that's amortized over the next several years. It did increase because of changes in assumptions related to ERS. On the liability side, you can see that also decreased a commensurate amount, about $7.7 million, again, primarily due to repayments on the bonds. The balances on the bonds, approximately $18 million in 2019, about $12 million in 2020. So repayments of about $5 million, about $5.4 million, and again, there's some premium amortizations there. The Series 2005 bonds, to be noted, were paid off in 2019 in fiscal year 2020. So those no longer exist. So the bonds payable are the 2007, 2015 bonds, which total about approximately $12 million, and then there's also the premium related to that. Due to the city of Buffalo as the corresponding May and June sales tax less any amounts held by the authority to pay for debt and administrative costs. And again, because of the shutdown, sales tax declining, the amount due for May and June to the city also declined about 1.8. Deferred inflows of resources, a very minor amount, again, due to the non-cash pension plan related to ERS. So leaving a net position, the restricted amount, about $5 million, those are the amounts held for debt service, and it's the actual cash and investments in your debt service fund, less the interest payable. So that amount is the corresponding asset to that is actually the investments at the top, about $5.2 million. So those categories actually offset, leaving an unrestricted negative net position of about $5.4 million. And in very simple terms, what this represents is the bonds that were issued without the offsetting mirror bonds. So the 12 million in bonds payable, and then the notes receivable mirror bonds about 7. So the difference there is about a negative $5 million. And of course, that will be made up as you receive the sales tax revenue to pay off those bonds that don't have corresponding mirror bond offsets. On the statement of activities, you'll see that total general revenues decreased about $21 million. This is primarily due to the state aid revenue that decreased about almost $20 million. Due to the cash flow, the pandemic issues, the state did withhold 20% on your final aid payment, and that totaled about $20 million. So that's actually the decrease there. That was recorded as an allowance that it would not be collectible. However, you may receive this in the future, but it's uncertain, so it was allowed for and did result in the decrease that you see of approximately $20 million. Sales tax revenue also declined about $1.2 million, again, related to the last 4 months. Sales tax was actually trending at least equal, if not higher, probably higher than 2019 until March of this year. So the last 4 months declined because of the shutdown due to the pandemic. So the net effect there was 1.2, and that's expected because although some things have reopened, not, as everyone knows, not everything has reopened. So that decline is expected to decrease into fiscal 21 year. On the expense side, again, distributions to the city of Buffalo and the Buffalo School District decrease. You'll see that the distribution of the city of Buffalo, again, the decrease primarily related to the decrease in state aid. So you can see that decreased by $20 million, consistent with the decrease in the revenue up above. General and administrative expenses, this is actually on an accrual basis, decreased about $560,000. On a cash basis, on your fund basis, it actually went up about $30,000 due to a slight wage increase. The wage increase was due to the transition in personnel. Bob Miller leaving toward the end of the year, and there was some overlap of salaries paid during that transition period that resulted in about a $30,000 increase on a cash basis. There are several non-cash, on a government-wide basis, however, there are some non-cash entries related to primarily OPEB and to a lesser degree pension accruals, and the OPEB expense, the OPEB is other post-employment benefits, primarily post-retirement health care related. And there were several different changes and assumptions which actually reduced that accrual entry by about almost $600,000. And that was related to a change in the turnover assumption. It was actually based on the federal turnover rate in the past, which was much higher than what the authority actually experienced. So we were able to take 50% of that, which decreased the OPEB liability. The other assumption they changed for OPEB was the salary increase, the inflationary salaries from 4% to 2%. So overall, that had an impact of about a little less than $600,000, which you see under the general and administrative expenses difference. So overall, the change in net position, a negative, a favorable change in net position of about $430,000, again, primarily due to the general and administrative expenses related to OPEB that fall to the bottom line. the other pieces of your statement of activities are actually just primarily flow through. Revenue comes in and is dispersed to the city or used for debt repayments.
So Donna went through the financial statements, and then I'll just cover the 2 other reports or letters that we issue with our audit as well. She's referred to most of these changes throughout her presentation already, but our communication with those charged with governance, in that report, we would make you aware of any new accounting pronouncements that were required to be implemented in the current year. I think the one good thing that I found about COVID was that it delayed implementation of all standards. So that's the good news, the silver lining, I guess, that we can all celebrate. So no new pronouncements. As far as accounting estimates, the estimates remain the same with the exception of the collectability of your AIM payments, that's state aid. So as Donna mentioned, the authority did book an allowance fully against that 20% withholding. So when they received their June payment, it was 80% of what it should have been and what the state budget had allocated. So that amount is fully allowed against, as you saw in those reductions in revenue and expenses. So if it comes at that time, it would just increase your revenue and expenses at that time. So it would be a higher number next year if you get all of your AIM and the amount that hasn't been received. Your other estimates, again, really remain unchanged. And the big ones I'd say would be the actuarial calculations. So Donna referred to the pension, which is the state employees retirement system. So there's an actuary for the state, hired by the state, that calculates those amounts, and your share is included within your financial statements. And then OPEB is calculated using what's called the alternative measurement method. And as Donna mentioned, there were changes this year, and it was really just a function of looking at the OPEB liability that kept increasing each year when you've really had no one receive any benefit from that yet. So it didn't really make sense. So we looked with management at those assumptions and thought, well, that turnover seems high, even though the standard allows use of that federal rate. Maybe it makes more sense to look at historical data. So they did work through that and adjust those assumptions to create what seems a more reasonable, still a big number, $1 million liability, but less of a large number than it had been prior to those changes. We refer you in this letter to these, what we deem to be the significant footnote disclosures. They kind of mirror all of the major things we already talked about. So note 4 is amounts due from other governments. It shows that allowance against the AIM receivable. Note 5, 6, and 7 relate to your liabilities. So your bonds, your pension, your OPEB. And then note 8 is new this year. That's a risks and uncertainties disclosure. And that is specific to COVID and really the fact that there are so many unknowns and so many uncertainties, from your withholding of your withholding of AIM to what is going to happen next year with your sales tax revenues, and other amounts which, you know, we're assuming at this point will be significantly lower, and what that impact will be. So that's just a general point to just bring to your attention the impact, the uncertain impact of COVID on the authority. Nothing else of significance in this letter. We had no difficulties. Again, we performed it remotely, but amazingly, oh, I love the dog in the picture, Bryce. We performed it remotely, and it still went extremely well. This is actually the exact day we presented last year, so I think that's pretty impressive. I think management was extremely helpful in getting us all the information we normally need, scanning in things they can usually just hand to us. So we really appreciate all their help with that. There were no adjustments that weren't made as part of the audit, and really that was just the discussion and subsequent adjustment to the OPEB liability. The only open item is our representation letter. That's the last piece of the audit. I just sent it maybe an hour ago, so that's why that's open. But once we receive that back and the board approves the audit, we're able to issue it. And then the final page is just a summary of our, what you can see is a very lengthy management letter. We are required to inform you of any material weaknesses we find in the authority's internal control as part of our audit, and there were no material weaknesses. So it's really a clean letter. The only point that we have in the letter is a carry forward informational point. Previously, this was supposed to be implemented for your current fiscal year, 2021. But again, it was delayed because of COVID. So now it will have an impact for 2022. Basically, it just requires recognition of any material leases on your balance sheet or statement of net position on a government-wide basis. So you have your building lease. I think that's really your first term is expiring at the end of this month. And then you have some option years. So assuming that those option years are likely, you would put an asset and a deferred inflow of resources on the statement of net position and recognize it like a capital lease going forward. So again, that's not effective until 2022. And that was really the only pronouncement that we thought had a significant impact on the authority. So that really sums everything up from our end, and then we can just open it up to questions if anyone has any.
Okay, thank you. Any questions from the committee or staff?
I'm fine.
Okay, I'm fine. As always, you make this very easy. Thank you. Hearing no questions, is there a motion to forward the audit and its findings to the full board with a recommendation for approval?
No move.
Second. All in favor?
Aye.
Okay. Thank you very much. We appreciate all the professional help we've gotten from you over the years. The next item includes a review of the annual report and recommendation for the full board to approve this item. In substantiality, in final form, as well as to delegate authority to the chair, the interim vice chair, the executive director, and the comptroller to make any necessary changes that may be required for its accurate completion. The draft annual report has been provided to you for your review. In addition, the annual investment report has also been provided in the committee packet. Jeanette will briefly discuss these reports with us. Jeanette?
Thank you. Before I move forward, I just want to make sure that there's a motion and a vote to approve the audit and its findings to the full board. And maybe that happened and I missed it.
I think we did that.
Yeah.
I did miss it, sorry.
That's okay.
That was fast, so I was paying attention. Okay,
I'm quick.
so the annual report, this report provides an overall encompassing summary of the mission of the Buffalo Fiscal Stability Authority and its accomplishments that were performed during the most recent fiscal year, ended June 30th of 2020. The report is completed pursuant to Section 2800 of Public Officers Law, and it's typically required to be filed within 90 days after fiscal year end, along with the audited financial statements. The New York State Authority's Budget Office is allowing a 60-day extension for all filings this year that are required due to extensions necessary because of the pandemic. Our report will be filed after the full board approves it at the next meeting, which I anticipate will be scheduled in mid to late October. In addition to filing this report with the Office of the State Comptroller, it will also be distributed to other various state officials as required by public authorities law, as well as to other interested parties who aren't required to receive a copy, but we do send a courtesy copy to. It's also posted to the BFSA's website along with past annual reports. There are 3 major sections to the annual report. The first is a general discussion, and included in there is a general explanation of the purpose of the BFSA, what the mission of the BFSA is, and how the BFSA operates under statute. Additionally, governance and administration functions are discussed. The general discussion was enhanced over this last year to include a broad discussion over the financial impact and the resulting financial uncertainty from the COVID-19 pandemic. The second main area of the report is the summary of accomplishments, and it provides performance measurements from over this last fiscal year. It includes a broad discussion of key economic and financial statistics that reflect the progress of the city and the covered organizations since BFSA was created. But importantly, it also includes the challenges that the city and the covered organizations are currently facing. Included in this section is an important discussion of the multi-year financial planning process as representing the core of BFSA's financial oversight. It is included along with a description of what was conducted by BFSA related to this oversight over the last year. We include a description of each report issued by BFSA over the last year, along with recommendations and comments made by the authority. This demonstrates the board's compliance both with the statute as well as with its mission. A total of 31 reports were issued by BFSA over the last year. Other discussion areas include the fiscal monitoring process conducted by BFSA, including the monitoring of workforce trends, a summary of the financing framework of both the city and also of the city of Buffalo. Finally, a cumulative financial impact summary of BFSA is included. The cumulative impact of BFSA actions is estimated at $558.6 million through June 30th of 2020. A significant amount of $240.4 million represents the estimated savings from the wage and hiring freeze and step freeze that was implemented over a 3-year period by the BFSA from 2004 to 2007. And this, of course, provided the organizations a reset period to renegotiate their contracts. The third section provides final BFSA reports on the reviews and analyses that were conducted over the final budgets and 4-year financial plans. My last comment on this report is that careful consideration was taken to ensure that the board's actions related to the review of the final financial plan of the city was clearly documented within this report. So I will pause at this point and see if there's any questions on the annual report.
Okay, none from me, Fred.
Okay.
Okay, guess not.
And a couple comments on the investment report. This is an annual report that's required to be completed pursuant to New York State Public Authorities Law. After approval by this committee, it will be filed with New York State and also posted on the BFSA's website. It requires any changes that are made to the investment guidelines to be disclosed. The BFSA last approved the investment guidelines on August 3rd, 2020. There were no changes made to the investment guidelines at that time. A summary of cash and investments at June 30th, 2020 is provided. On a cost basis, total cash and investments totaled $5,504,676. The total fair value at that same date is $5,619,836. As indicated by Donna previously, majority of that represents funds that are set aside for debt service. All investments mature no later than September 1st, 2020, with the exception of one investment in state and local government treasury securities. It's in the amount of $135,000. It matures a year from this year, so September 1st, 2021. And this investment was made to avoid any yield restrictions associated with our 2015 refunding. Total investment earnings for the year was $154,450. The majority of investment earnings is generated from forward delivery agreements that had been entered into at the time that BFSA sold their bonds. These FDAs provide a guaranteed investment rate between 4.48% and 5.13% on the debt service set-asides that are invested monthly from the sales tax intercept. These investment earnings are distributed twice a year to the city of Buffalo. With respect to fees, the Buffalo Fiscal Stability Authority does not incur investment fees or commissions in connection with its investment portfolio management. Trustee fees were paid in the amount of $8,663. It's a consistent amount that was incurred last year as well. Finally, the costs of the operating funds bank accounts are currently covered through compensating balances. So there's no additional bank fees. Are there any questions on the investment report?
None from me. Fred? Guess not. Is
No,
Fred
I'm
muted?
sorry, I was muted.
Fred was muted. Okay. Any questions, Fred?
I guess the only one, so we at least have one question on something, is are we looking at the volatility of the short-term rates going forward with the pandemic on any impact on any of those short-term investments?
We absolutely are. In fact, Claire's been working on that with our trustee as we invest our set-asides for a short period of time before they roll into the forward delivery agreements. So we're looking at our options between commercial payment paper and treasury bills and the reserve account so that we can maximize investment earnings to the extent possible. We're not seeing a large fluctuation in other types of rates. Luckily, we're locked into the FDA rates until those bonds mature. So we will continue to receive those. Those are guaranteed interest rates.
Thank you.
You're welcome. Thank you.
Okay. Is there a motion to accept the annual report as presented to us in substantially its final form, and to delegate authority to the BFSA chair, the interim vice chair, the executive director, and the controller to make any necessary changes that may be required for its accurate completion?
So moved.
I'll second. Any discussion? Hearing none, we'll vote. All in favor? Aye.
Aye.
Opposed? Okay, that passes too. With respect to the investment report, do I have a motion to approve this report as discussed with us today?
So moved.
I'll second. Any discussion? Okay, all in favor?
Aye.
Opposed? Okay, that passes. Okay, the final item of business is to approve PFM Financial Advisors as financial advisors for the one-year period from October 1st, 2020 through September 30th, 2021. PFM has served as the financial advisor of BFSA since the period that BFSA issued debt on behalf of the city and retains the historical knowledge related to these complex transactions. PFM has agreed to extend the contract with the same terms, conditions, and prices as last year. A copy of a letter confirming the terms and the accompanying draft resolution has been provided. Is there a motion to approve the one-year contract of PFM as BFSA's financial advisors?
So moved.
I'll second. Any discussion? Hearing none, all in favor?
Aye.
Opposed? Okay, that passes. Is there any new business to address? The only comment or general comments, the only general comment I would make is once again, this process has been efficiently done largely because of the effective collaboration of staff and the auditors, and certainly the board is very appreciative of that collaboration and once again the results of a clean audit. I'd also just mention the fact of the recent rating of BFSA, which sustains a very high rating, which I think may be helpful as the city continues to deal with the unprecedented problems that confront it. Fred, anything to add?
I just want to thank the staff and thank both Donnas for all of the hard work and trying to get through everything with the pandemic and all of the issues with federal and state budgets. This is going to be a very, very confusing period that I'm amazed that we're able to get as much done as we have done. And hopefully soon we'll be able to see whether or not the federal government will come through with some money to be able to make sure that we can protect the people from the city of Buffalo from these sort of huge cuts in services and raises in taxes. Because I think that without that, both those things are going to have to be on the table. So I want to thank everybody for their hard work, because I know how stressful this has to be for everyone trying to deal with all of these problems. Hopefully everyone in the community understands how hard you're all working, and I really want to say I appreciate it.
I certainly would join in that across the board. Donna and the city have done, I think, remarkable work under totally difficult circumstances. You know, one can only say the obvious, which is that absolutely imperative that the federal government address the problems of the state and local municipalities that have been caused by this. The budgetary difficulties are enormous, and the room to move to deal with them is extremely limited at this point. So we're certainly going to continue to work closely with Donna and the mayor's and his staff to try to minimize the effect of this, if at all possible. Although clearly, if there is no federal aid forthcoming, this is going to be a very difficult couple of years.
Thank you. Appreciate all your assistance.
Oh, well, I don't know how you're doing it. It's just boggles the mind. Okay, is there a motion to adjourn?
So moved.
Oh, wait, I just want to add one thing, which I think is obvious, and we've talked about it before, but we really are somewhat hamstrung by the lack of a full makeup of the board here, as illustrated by the fact that we're having a committee meeting with no following general meeting, and it makes it very difficult at a time when being nimble and being able to respond is extremely important. So I appreciate all the efforts of Jeanette and staff to try to make this work under the tightest of possible circumstances. And, you know, one can only hope. Okay. Is there a motion to adjourn?
So moved.
I'll second. All in favor? Aye.
Aye.
Okay, we stand adjourned. Thank you, Fred.
Thanks, everybody.
Thank you, everybody. Bye-bye.
Thank you, everyone. Have a good day.
Thank you, Jeanette.
Thanks,